Thanks for joining us for our Revival Gold webinar. Hugh Agro is the CEO of Revival Gold and will take us through the presentation, followed by a Q&A period at the end. I took an interest in Revival a few months ago myself because it checks off a lot of the boxes for an investment for me. Great jurisdiction in Idaho, significant infrastructure in place, a strong and aligned management team, and though the stock has performed well recently, it's still very undervalued with a lot of upside potential. In February, Revival published a resource on its Beartrack-Arnett project of 1.35 million ounces indicated at 1.16 grams per ton gold and 1.64 million ounces of inferred resource at 1.08 grams per ton. So before I hand it over to Hugh, I'll just remind you to input questions in the Q&A box below or email them to tina@cap.ca. The presentation will contain some forward-looking statements and disclosures are available on the website. So thanks, Hugh, for being here. Looking forward to the presentation.
Thank you for the introduction, Tina and Deborah and Adelaide Capital. It's great to be with you. Well, welcome everybody. Great to be on this webinar. And I understand we've got a good crowd. It's a great time to be investing in the gold business. It's been a little bit of a longer slog for those of us who are in the industry and have been in the industry for a while. But here we've arrived. Gold is at $1,800 an ounce, and who would have believed it would move so quickly? Obviously spurred on by the incidents in the world today. Revival Gold was founded because we saw the opportunity, both in terms of the metal and a revival of the metal price, but also in terms of the team that we have, and I'll talk about that. So a revival of a veteran gold team and the revival of a project. We focused on a brownfields asset because we wanted to move more quickly with that asset towards producing gold and ultimately delivering cash and dividends to our shareholders. So really a 3 times revival with Revival Gold. Our cautionary notes. For those of you who are new to the gold industry, this is why we're in the business, because the Fed can't print gold. This is a quote from the Bank of America, and it stands true. Fiat currencies will not withstand the test of time. We know that, and we know that there is an acute shortage of good quality gold projects in good geography. Revival Gold is focused in the state of Idaho. We're focused on a brownfields asset. And we're doing so at precisely the time when the larger companies out there are running short of reserves, let alone resources and growth in production. So this is a good time to be investing in gold, not just because of the case for gold as a metal, but also for what's going on in the industry. And you know, Barrick just came out with their quarterly results, about $1,000 all-in sustaining cost against a revenue per ounce of about $1,700 gold. That's a 70% margin. Just think about that relative to the tech industry today. And you can imagine where the generalist investors are going to be fleeing in the months and years to come. As I said, we're on a brownfields gold project in the state of Idaho. It is the largest former producing gold mine in the state of Idaho. It's the 2nd largest known deposit of gold in the state. And it's gold only, and that's a very important differentiating aspect with our project. We've got 3 million ounces of resource, as Tina indicated, and there's a lot of potential to expand on that. In terms of our work programs underway, we've got a PEA study that's looking at just the heap leach component of our existing resource, and we're underway with exploration to continue to expand on the resource that we have in the mill category. Tight capital structure, liquidity, and strong institutional backing, as I'll show you. So here's the capital structure. We've got about 56 million shares outstanding. Again, a differentiating aspect about our company is that over the last 3 years, we've been very careful with the way we spend our money. Our finding cost is under $5 an ounce. And that just means that we've issued less shares to get to the position we're in today. Look at us relative to our peers. 56 million shares outstanding. Share price performance has been good, and I'd say we've been performing well with our peers. But look at how many shares we've issued relative to our peers, and I think we can make a very strong case for a lot of upside from here on a dollars per ounce basis alone. About 36% institutional ownership. That's a very strong vote of confidence in a relatively new and junior company. We've got about 14% retail float and management's at 13%, which means we are very much aligned with our shareholders. And so when we make decisions about how to spend our shareholders' money, we make those decisions with a lot of care and a lot of thought. Here's the leadership team. I spoke about a veteran team. I'm a mining engineer by background. I've spent most of my career in growth in gold, most recently with Kinross Gold, where I was Executive Vice President, Strategic Development, and part of taking that company from 1.7 billion market cap to 17 billion market cap. Wayne Hubert's our non-exec chair. He's the former CEO of Andean Resources, which was sold to Gold Corp for $3 billion in the last cycle after a build-up from about 100 million market cap. Not only has Wayne got capital markets success and track record, but he's also the former finance director for the Beartrack Project, our focus asset. And so he's got a lot of deep roots with the asset, with the jurisdiction, and of course a super capital markets background. Our VP and CFO, Adam Rukasowicz, a very strong hand in the business. Steve Priestmeyer has just done an outstanding job for us over the last 3 years. In his prior gig, he was involved with the company that was sold to Agnico Eagle. Very strong player in the exploration space. Did his master's degree in Idaho. Our general manager, Pete Blakely, is the former general manager of the project at Beartrack, lives in Salmon, Idaho. Don Byrack, another resident of Idaho, on our board, and a person with rich experience exploration, not just in the state of Idaho, but up and down the Cordilleran. So we've got a lot of experience on a capital markets, from a capital markets point of view, from an asset point of view, and from a state point of view. Just to round out the group here, Rob Chose, a very seasoned executive in the gold space. Rod Cooper, who is joining us, looking after our technical work in respect of the PEA and our evaluations. Just super people to have involved with the company, and a great asset. We're positioned in North America. I think if you're going to invest in gold, you want to be in a good geographic location. You want rule of law. You want to have security of title. And yes, we have cumbersome laws in the United States, and sometimes they're a bit of a pain to work through the regulations, but at least we have rule of law. And we have qualified people who have deep and backgrounds in exploration and mining, and strong understanding of the science and the technology that goes behind modern mining today. North America is the second largest gold producing region in the world, and the Fraser Institute has rated Idaho as standing above all of the provinces and territories in Canada in terms of its investment attractiveness for exploration and mining. Idaho seemingly has come out of nowhere since we got involved, following in the footsteps of Midas Gold, who've done an outstanding job in that state. And there are a number of other companies that have joined us even more recently. As one of the earlier new generation explorer developers in the state, I would say we had our pick of the litter. We chose Beartrack-Arnett for its exploration potential, for its community support, and for the wonderful presence that we can enjoy in that state through our team and our team's experience there. Here's the project. This is a view of the South Pit looking up the axis of the Panther Creek shear zone, which hosts the mineralization at Beartrack. As I said, a former producer, about 100,000 ounces a year from an open pit heap leach operation. We put out a follow-up resource in February of 3 million ounces. There it is broken down for you. About 600,000 ounces of that material is in heap leach. The rest is in a mill category. And so we're taking this dual track process. Number one, PEA on the heap leach restart potential of the project, reusing existing infrastructure, leveraging that existing permitting and permitting regime that we can leverage, and then also pursuing this much larger mill operation, conceived by RPA and the resource from February at about 20,000 tons a day. That would make it a 300,000 ounce a year producer, one of the top 6 gold projects in North America at present production rates in the U.S. So a significant mill project for the future, and in the more immediate term, this heap leach restart project. Here's the land position. The left block of the map here is the Arnett block of the property. The right block is the Beartrack piece of the property. We actually started in Idaho in 2017 with the assembly of the Arnett block of the property, dealing with a number of different owner groups, including the descendants of the first governor of the state of Idaho. A lot of history. At Beartrack, the project is defined through the Panther Creek Shear Zone. You can see the mineralization outlined in yellow, the surface expression of that mineralization, and it's open. It's open to the south. It's open to the north along strike, and it's also open at depth. I'll show you more of that. At Arnett, we've got a satellite deposit of oxide material that's very complementary to the ADR facility you can see at the center of the property block in blue. Of course, there's roads and power into the site, and we're about an hour's drive from the town of Salmon, Idaho, which is a spectacular part of the state of Idaho, a ranching, mining area, and a community of about 2,000 people with a lot of pride in their town, and a lot of support for responsible exploration and mining. Here you see a long section through the main mineralized trend at Beartrack. Again, we've got about 3 million ounces in the deposit, 200,000 ounces of that in the satellite at Arnett, so the balance of it here in the shear zone at Beartrack. As I said, the deposit's open at depth and it's open along strike. We've got a mineralization over 5.6 kilometers, and we've got another 5 to 6 kilometers of favorable ground to continue to explore. I wanted to talk about the depth potential at Beartrack. I know there's a lot of focus on high-grade deposits. Our drilling to date has been the near-surface open pittable material, but we have seen some higher grades in the system, including 71 grams over 10 meters in the Wards Gulch area. This is a picture cross-section of the deposit. It's a shear zone hosted system. We think it's an orogenic gold system. That is to say, it's one of these deep-seated sorts of systems. We haven't found the end of it. It's open at depth. And as I said earlier, we haven't found the strike ends of this deposit either. You can see some of the drill holes into the deposit. You can see the $1,400 gold pit shell for the resource that we put out in February. And you can see the start of an underground domain in this figure on the right-hand side of the page, which is very interesting to us, gives us reason with future drilling to look more for those higher grade sorts of assays that we show you on the left side of the page. Very, very intriguing potential at depth and in the higher grade category. I mentioned to you that we see strike potential for another 5 to 6 kilometers in the main mineralized trend at Beartrack. That's to the south of the project. There, if you look at this map on page 12, at the bottom we've got an area called Rabbit. It's about 2.5, 3 kilometers south of the footprint of the existing mineralized footprint at Beartrack, and it falls in a very interesting area of geophysics anomaly. This is mag geophysics. The other thing that I point out on this figure is that in the left branch of the property, that is up at Arnett in the Haiti zone, where we've got 200,000 ounces of oxide material, there's a very large 2-kilometer diameter and relatively shallow mag high. This is would suggest that we've got a big heat engine under that mineralization at Haiti, and it gives us good reason to want to get back there and start continuing to drill and expand the mineralization at Haiti, which is open in all directions. So in terms of drilling and priority objectives for drilling, our team is in the field as we speak, working on our mapping and our targeting, our detailed targeting. But I think when the time comes and we get back to drilling, we'll want to be up in the Haiti area on the left branch of this property position. Down at Rabbit, which I mentioned to you, is a blind target about 2.5–3 kilometers south of the existing mineralization at Beartrack. And of course, we've got some lower hanging fruit at the south end of the Joss zone and at the south end of the North Pit zone, between the North Pit and South Pit zone. So lots of target areas here at Beartrack-Arnett for future drilling. The first set of work that we're busy with at the moment, though, is field mapping, geophysics, soil sampling. We've got a lot of work to do in terms of the property position. There's a lot of target areas, and the geologists are out right now, boots on the ground. I should just make a quick comment about metallurgy. As I said, we've got 3 million ounces of material. About 600,000 ounces is in the oxide heap leach category. Recoveries from historic work and from test work that we've done in the order of 70 to 75% from a two-stage crush scenario. In the sulfide material, we've done now 2 phases of metallurgical test work. And I'll just pause here to say that not only do we have an outstanding exploration team, but we've got a lot of depth in terms of understanding mining and the things that are required to actually turn good geology into a mine. And one of those is obviously metallurgy. And we've focused a lot on that. We've done 2 phases of met test work on the mill material. RPA with SGS and John Marsden have suggested to us a recovery of 94% based on the test work that's been done to date in a 20,000 ton a day process, producing 3,000 ton a day of concentrate, which would be pressure oxed and then leached to produce gold on site. So very standard process, excellent recoveries, and well tested for the stage we're at right now at a resource. Here's the Beartrack ADR facility, or a shot at least of the ADR facility as it stands right now at Beartrack. We've got quite a bit of infrastructure to work with, including this ADR facility, which we're in the process of evaluating for the purposes of restart, and as part of our PEA work currently underway. We've had the engineers out to site now a couple of times, and this is a great piece of infrastructure. Historic rate of production was about 14,000 tons a day, and this plant, of course, dates from the prior operation. It'll have to be refurbished, but certainly gives us a head start. And together with a power line, the leach ponds, cyanidation permit, the water treatment plant, all of these assets are give us a head start in terms of the potential for a restart of the leach operation at Beartrack-Arnett. Just a quick word about mining and exploration in the state of Idaho. If you look very carefully, the flag on the left side of this page has a miner on it. The state was founded in the 1800s. And for the history buffs, of course, this is the location where Lewis and Clark came across the Continental Divide and over to the western part of the United States. So a lot of history here, but a lot of history of frontierism, of ranching, of timber, and of course of mining. Mining was what founded the state of Idaho. And there's a deep connection with the land here in Idaho, and there's a deep understanding and welcoming, I would say, of responsible mining in the state of Idaho. Companies that are active in the state are all strong players. We've got the support of the state government, which is coordinating activities amongst the various agencies, and even has gone so far as to be involved in marketing exercises with companies like Revival Gold. This is relatively unprecedented. I don't think we've seen this since the Yukon and that government's initiatives to promote responsible exploration and mining. And that shouldn't be a surprise to those of you who know Stephen Quinn at Midas Gold. Stephen Quinn was part of making that happen in the Yukon, and he's brought that sort of camaraderie to the state of Idaho, and we've got a very good connection and rapport with state officials, with our local community pictured here, And going so far back as the first governor of the state of Idaho, George Laird Shoup, pictured at the bottom of the page here. What's next for Revival Gold? We're focused on building value for our shareholders, and we see that through advancing Beartrack-Arnett. And the first task at hand is the PEA on the heap leach restart, which we'll deliver before the end of this year. Work is going very well there, on track, on budget. As well, we've got our field crews out doing exploration, mapping, geophysics, soil sampling, all of the preparatory steps. And we're in the process of lining up drill targets for potential future drilling later this year. We'll do more work on the resource next year, and my hope is that we'll be into a mill project PEA either in late 2021 or 2022. That's generally the timeline for taking Beartrack-Arnett forward. But the other thing we're doing is we're looking at opportunities to continue to grow the business beyond what we have with Beartrack-Arnett. I think there are good opportunities out there, and I believe that we're just at the start of a bull cycle in gold. So this is the time to be positioning, both as investors and as corporates. Here's a snapshot on relative value. I could quickly summarize this busy slide by saying that Revival Gold is trading right now at $16 an ounce. $16 an ounce relative to a metal price today of $1,800 an ounce. Relative to peers, according to what we see from TD, trading at $60 an ounce in the exploration space. Relative to the senior producers, trading at somewhere in the order of $300 an ounce. So there's a lot of value. Of course, there's risk at the junior stage taking these projects forward, but I think if you look at our grade and you look at what we have in terms of geographic location, in terms of skill set, in terms of infrastructure, I would say you're getting the ounces at Beartrack-Arnett almost for free. This is an exciting project with a lot of upside, and even if we continue to deliver just on those 3 million ounces, I see lots of upside from here based on this figure from RBC, based on the research coverage on our company, and based on what I see from our peers. So there you have it. We're fast-tracking Beartrack-Arnett with a veteran gold team. We've got a substantial resource. We started with nothing, and we're up to 3 million ounces today. We think there's clear potential here for better than 5 million ounces. PEA is underway, and we're permitted to drill should the opportunity arise. And we've got a proven property, brownfield attributes, past producer, significant knowledge about how that operation will perform. And we've got obviously a head start, not just in terms of infrastructure, but also in terms of permitting. So it's a compelling opportunity at $16 an ounce. I'd say there's lots of upside in this company. And we're just at the start of a bull run in gold here. Remember, the seniors and intermediates all need growth to feed their pipelines. And that problem isn't going to go away from them. It's just going to become more acute as time goes on.
Thanks, Hugh. That was a great presentation, and it's interesting, I think, from a valuation standpoint. Obviously, you're discounted relative to peers, but you do have all that infrastructure in place, and with the brownfields asset, I think there's a lot of elements to the story that have been de-risked. So there's not only a long-term view here being positive on gold, but also a bit of a catch-up relative to peers. So why don't we get into the Q&A? If you have any questions, you can input them in the Q&A box below, or if you're watching from YouTube, you can send me an email at tina@adcap.ca. One of the questions that came in was asking about any more drilling at Haiti soon.
Yeah, we'd like to do that. At the moment, we're focused on doing the field work required to support that drilling. The team is out now with mapping. There's a lot of prospects at Arnett, and one of the things we don't want to get caught, or one of the traps we don't want to get caught into, is focusing all of our attention on one target at Arnett. There's at least 5 or 6 other targets, so it's important for us to make sure we prioritize and get the best bang for a buck. And one of the things I bragged about earlier on in the presentation is that we spend very wisely. Steve Priestmeyer, who leads our exploration, Don Beartrack, who's head of our technical committee, are very careful about how we spend money. And we want to make sure we deliver for our shareholders, including ourselves, best bang for our buck. We've got an obvious target to expand. It's open in all directions at Haiti, but there's some other interesting targets on the property as well, and the team is just out right now prioritizing.
And in terms of the resource that you put out in February, Haiti is the only part of the Arnett deposit that's been included in the resource? That's correct.
We've got some 600 holes in the resource at Beartrack and just 40 on the Arnett property, so core holes that is. So we've focused in that particular area for the moment, and lots of potential to expand across that property position. We've got two trends that are 2 to 3 kilometers long, where we've got an anomalous soil, gold in soils, and where we've got favorable structures. So this is an interesting area to be exploring, and there's something going on here. I mean, there's been over 4 million ounces of gold discovered or produced in this particular valley. That means there's a big engine in this location. 2 mineralizing events, one at Beartrack and the second at Arnett. Something's gone on here that's caused this, and our team is busy getting to the bottom of it.
So in terms of the deposits, there's the oxide and sulfide components. Can you give us some color on how the oxide to sulfide ratio plays out, or are you expecting that to be consistent going forward as you explore different targets?
So we've got about 400,000 ounces of leachable material at Beartrack. Most of that is on the edges of the previously mined pits, and in some cases extensions of those pits. All of it associated with the Panther Creek shear zone, which we believe is the oxidizing mechanism. And in fact, we get oxide material at depth. In one case, down to about 400 or 500 meters in that shear zone. But the material that's in the resource is all associated with the shear zone. It's all close to surface. And I think that's going to be the extent of it at Beartrack. Beyond the oxide material at Beartrack, we've got lots of potential for mill material. And so that's where the focus of our attention on exploration will be at Beartrack. At Arnett, completely different animal. Different style of mineralization. We think it's an intrusive related gold system. The oxide mineralization at Arnett that we have to date is a couple 100,000 ounces. It's all within 125 drilled meters of surface, and it's all associated with Haiti, as we were saying earlier. But there's 5 or 6 other target areas we want to get into and continue to explore. We think there's lots of potential on Arnett for additional oxide material.
We have a couple questions from the audience. One is about Idaho in general. It's a great jurisdiction. Do you have any questions or concerns from feds or environmentalists?
Yeah, so there are a number of considerations generally with projects like ours. The first one is, what does the local community have to say about your project, about the implications of having a mining project? And in our case, we've got a very supportive community. And the reason is that this is a relatively recent, successful mining operation. There have been no citations for environmental disruption or abuse. We're an hour's drive from town, close enough to be integrated with the town, but far enough away that we don't cause any disturbance for the town of Salmon, Idaho. And the site is wonderful. It's been very well looked after by the predecessor operators, Yamana Gold and Meridian Gold before Yamana. And this is one of the great things about doing what we did back in 2017, acquiring an asset from a major company, is they're generally very well looked after. They have to be. And it's not like we're coming to a super fun site to try and clean it up. It's not like we're coming to a barren site that's been entirely closed. We've got a lot of the attributes of an existing operating site. And just coming back to the question, we've got the support of the local community. As I like to say, when we have these community meetings every year with the folks in Salmon, first question always is, how's the exploration going? Second question is, when is the mine going to restart? And the third question is, where do I sign up for a job? So point number one, we've got the support of the local community. Point number two, we've got the support of the state government. We understand the role that responsible mining plays in the state's economy. This is not something that's going to take place in downtown Boise. You're not going to see a mine built anywhere near the Boise River or near the community of Boise, the state capital. Here we are in the far eastern reaches of Idaho. This is what this is the sort of thing that can provide jobs in this region, and it's important to the state governor and to the state economy and the community of residents of Idaho. Beyond that, of course, we have to be careful of water. That's the #1 concern in this area. We're 3 drainage systems away from some of the major drainage systems in the west. So we need to be careful with water and fish species. But as we've seen from the track record of this operation, that can be done, and it can be done successfully. So we're feeling very good about our position here in respect of potential opposition to exploration and mining. And we go out of our way to engage with those groups that are known to be active in the state. We haven't had anybody litigate against us. We haven't had anybody cause disruption in our drill permitting processes. Those have gone very smoothly, and it's because we've worked with NGOs, the communities, and others to try and address their concerns before they get out of hand. I think that's our approach as explorationists in mining, is to work with the community rather than against.
And I think being a brownfield project, there's probably a lot of understanding from the community already as well.
Exactly, and we can bring the community out. We've done several tours with state and federal political officials, as well as with NGOs. And the great thing about this site is it advertises itself. It's very, very well maintained. It's not like we're going to be moving any rivers or clearing down a lot of trees in a situation that's pristine forest. We don't have any grizzly bears. This is a site that's very well suited to exploration and mining. And of course, we're going to take our responsibility with the site as priority #1, along with the safety of our personnel and the community. But this is a site that lends itself very well to exploration and mining.
And just going back to valuation a little bit, obviously you're undervalued compared to peers, but then you're trading just above kind of infrastructure value. So why do you think that you're so undervalued, and what are your plans, I guess, to deliver that value to shareholders and help increase value?
Yes. So, well, one thing is we've got to get out and tell the story, and that's part of working with Adelaide Capital, and we know that's an area that we can improve on. I'm a mining engineer. That causes me to be very careful about what we put out in the public domain and how we do our work. So we're relatively methodical, I'd say, relative to our peers. It's easy as a geologist to do a lot of arm waving. It's a little less difficult if you come from a senior company and you know all of the different aspects that are involved in turning one of these things into a mine. So we're taking care. We're taking a prudent approach with the project. We've got some of the best technical experts in the world, I would say, working on Beartrack-Arnett, RPA on the resource, Wood PLC on the PEA, people like Rod Cooper, Don Byrack, Steve Priestmeyer, Pete Blakely, Wade Hubert. These are people who take care with their reputations and the work they do, and the care with which they do things. So yes, we're a little more methodical, spend a little more carefully, but we'll evolve, and we'll get out and start telling the story.
So just speaking about spending going forward, let's talk about the balance sheet a little bit. You're in the process of raising money in March, and then you ended up internally funding a program for $1 million. So can you expand on that and maybe talk about the warrant situation, because I know you've had some money come in as well.
Thank you. I'm glad to speak to that. We obviously have all been through a very difficult time with COVID, and many of us are still grappling with COVID. In the financial markets, just after we announced a $5 million financing brought to us by a group of brokers, we had this dramatic downturn in the broader equity markets and in our market. And the last thing we wanted to do was stuff the brokers that are following us, the investors who want to invest with us at a very difficult time in the market. And so what we did was we withdrew the financing, and we said, look, we'll top up the treasury with cash from existing shareholders. All of us stepped up at a very difficult time in the market. And I'm going to say that personally, you know, we were all down significantly. So the resources that we redeployed into Revival Gold, you know, were costly to take out of the market that time, but we all stepped up and did that. By we all, I mean those that are existing shareholders that stand by the company. And I think what that did was show the market and those you know, vagrants, various players in the market, that this is a company that's got solid shareholders that will reach into their pockets even in a very, very difficult time to support the company, because we believe in what we're doing. We think we've got a great project in Beartrack-Arnett, and we want to preserve that value for better times ahead. Here we are. Markets, of course, you know, always move in extremes, but today I think we're in better times, and the outlook for gold has never been better.
And you certainly weren't the only mining company who had some challenges in March, but I think from my perspective, it's important to see management kind of step up and put money where their mouth is. And you've had, so far you've announced $500,000 of warrant money come in as well.
Yeah, thanks for reminding me. Yes, again, this is, we've built this company with great shareholders, and they're highly supportive of what we're doing. What's great about these warrant exercises is that these are shareholders who are holding those shares for the long term. They're investing in the company because they want to see us continue to spend wisely and support our activities. As we get our geologists back out in the field, as we do the geophysics and complete the PEA, we see lots of value creation milestones ahead.
And you mentioned consolidation opportunities in the slide deck as well. What are you seeing out there that's interesting to you? And is that land consolidation, asset consolidation? What are your thoughts on that?
There's a big value differential between larger cap and smaller cap businesses. I think that's come off a little bit in the last 2 or 3 months, but it's a function of the market. And one thing that we know is that there's a lot of passive money in the sector, and that passive money chases market cap and liquidity. So there is a financing arbitrage in finding quality projects that are complementary and bringing them into Revival Gold, or looking at other consolidation type opportunities. And you know, you have to look no further than the great Ross Beatty for an example of how constructive that can be for shareholders. Now, there's a lot of details that go into it, a lot of due diligence. We do a lot of scrubbing of opportunities, but we have a lot of capacity. We've got Orion Mine Finance is a 10% shareholder and a strong backer of the company. So you can bet we're looking at opportunities all the time.
And those are Idaho-based opportunities.
Generally, we like good geography, so Canada, the United States. We like gold, and we love opportunities where our team can surface value. And so we're looking for unique situations that fit with our value creation capabilities, our technical skills, our capital market skills, our relationships. And if we find one, we'll put it together. In the meantime, we've got great value creation capability with Beartrack-Arnett on a standalone basis. We're at 3 million ounces. We think there's better than 5. We're trading at $16 an ounce, and that's got to change as we progress the project, even in the next months and year to come.
So as you move towards the PEA, towards the end of the year, do you have a sense of how quickly the heap leach could restart?
Yeah, ask me that question once we got the PEA done and we've got all the work completed on the environmental and permitting side. We have got a very active stream of work on that process, and we've got some great local talent in Casey Harvey, who have done a lot of work at the Beartrack site over the years. So we're looking at our our permitting strategies even as we speak. One thing I'll just say about it is that we've got a disturbed site, and so what we're trying to do is maximize our use of the existing footprint and minimize the amount of disturbance that is new disturbance that will have to be permitted or part of a new permit process. We'll get to the bottom of that over the next few months here, and we'll certainly be able to talk more about timelines for potential construction decision before the end of the year.
In terms of infrastructure refurbishment, do you have a sense of how much that would cost to bring the infrastructure back up and running?
You know, I think if you looked at some of our peers, and there's a number of them out there. I mean, Relief Canyon in Nevada is a good example that had some infrastructure at play. But there's a number of them out there. And typically, it's somewhere between $5 and $20 million to refurbish a plant like we have. I don't know where the final number is going to come out. The engineers are working at it at Wood PLC, and as I said, we've had 2 site visits to date looking at things like that. But it's typically in that order of magnitude. So, again, I go back to this point. We're almost giving investors at this point in time the resource for free. We've got road, power. We've got a water treatment plant. We've got an 11,000 square foot core logging storage facility that's fully winterized. We've got this ADR facility, which, even the concrete infrastructure, the footprint, all of the pipes and so on around that have quite a bit of value to them in terms of replacement cost. Anywhere between 20 and 40 million easily just on that piece of infrastructure.
And we talked about the balance sheet a little bit, but there was a question from the audience about how much cash you had at the end of June and how long you'd expect it to last. Yeah,
it's a great question. We've got $1 million of cash at the end of June. Our burn rate's quite low. Team's working very efficiently. For those of you who follow this sort of stuff, go look at our management information circular. This is not a team that's grossly compensated. We're very careful with the way we spend our money, and so that money will last. We are funded to complete our PEA and to complete the field programs we're currently underway with. So we're in good shape in that regard. Could we spend more money on this project? Does it demand lots more? Absolutely, but we're going to take our time and do it with care. There's a number of opportunities ahead of us. I'm sure these will come to fruition as we continue to progress the project and deliver value into the share price. But number one, we're shareholders first, and we want to continue to deliver value for our shareholders. We're not just going to take the first financing that comes across the door or the first strategic interest that comes across the door. We're going to continue to progress what we have, build value with the money we have, and the board will make, I'm sure, a good decision about how we progress from there.
Right. Well, I think prudence is a good long-term strategy.
Thank you.
I think those are all the questions that we have. So Hugh, thank you for presenting. Appreciate it. And I think Revival is a great story that a lot of people don't necessarily know about. So I'm glad we got to share the story with some of our investment network. We actually did have a last minute question. Where do you see the company, I guess, 3 years out? A long way away.
We'd like to be producing gold one way or another. Look, it's just a great environment to be producing gold in, and we've got a really capable group of folks who are driving towards that direction. I mean, is it possible that we get taken out somewhere along the line? For sure, but we're not looking in the rearview mirror. We're driving forward, de-risking the asset at Beartrack-Arnett, building value for shareholders, and to do that, you have to be clearly focused on building a mine, because that's what anybody who's going to acquire us wants to do.
Yeah, for sure. Well, thanks, Hugh. Appreciate it, and we'll talk soon.
Thank you.